This week, the number one bank in India, with a market cap of over 11.4 trillion rupee, fell more than 10%, that too in a matter of 2 days. Such circumstances create a situation of panic, where retail investors sell their holdings only to find the stocks recovering later. A few days back, I revealed the secret to wealth creation, where not only the invested value, but the time you hold your investments to grow matter the most. Today, we will quickly analyze whether holding HDFC Bank is a good idea. But before that, let's understand the fundamentals and notice its price movement. On 5th February 2021, the stock peaked around 1,600. Today, it is well below 1,500, implying negative returns. So, does that make it a bad stock? Considering slow moving FMCG stocks like Nestle generated over 50% returns during the same period. Many of you might have cashed out at 1,700 while others held steadfast. But wait before you make your decisions and let's study the fundamentals. You can see that the revenue and profits have doubled from December 2020 to December 2023 quarters. Ideally, these two numbers should impact the price of the stock. However, the short-term price movement is independent of stock fundamentals, which creates the opportunity to generate that extra return, what we call alpha. In this financial year alone, HDFC Bank is looking at a revenue surge from 128,000 crores in FY 2021 to 251,000 crores, with a quarter still to go. So fundamentally, HDFC is doubling every 3 years. So what led to the recent dip? Blame it on the high interest rates in the economy, which are set to fall soon, or the merger of HDFC and HDFC Bank. Excuses like these do not hold water anymore. When big investors buy, they buy low, while retail investors succumb to panic. Maybe big investors want to enter the stock now. Who knows? Speaking from experience, I have been holding HDFC Bank for a while now. When it hit the level of 1,500, I did not panic. I strategically averaged down my holdings and will patiently wait till it reaches to the level of 2,200 or 2,300, where I'll book the partial profits and hold the rest. With this example, I want to highlight the other most important piece of the puzzle in your wealth creation journey, and that is patience. Remember the reason why you invested into this stock. Rather, it is the reason why anyone would buy a share in a listed company, because you want to be a part of company's growth. And that only happens when you hold on to the stock, only if the fundamentals are intact. Investment leads to wealth creation only if you add the underrated ingredient called patience that nobody would discuss. For gambling, you have the casinos.